chartered your accounting tutor. In today's video, if you are trying to follow me up, you understand that I am treating books of original entry. And one of the books is Journal Proper. And I told you that Journal Proper have specialized transactions that are recorded in the Journal Proper, such like purchase and sale of non-current assets on credit, such as goods withdrawn for personal use, such as opening entries of an existing business. These are some of the transactions, and then others, correction of errors and transfer from one account to another. We already treated the other three. Today we are coming to conclude with the other two. Then we have the first one, we have the correction of errors made in recording transaction. One of the error is something like this. On the 31st of March 2026, bought furniture 10,000, which was posted to furniture repairs account. This is an error because in accounting we have different what is called classification of account. It means if you now move from one account to another, accounts are classified into two, personal and impersonal. And impersonal is classified into real and nominal. So we discovered that furniture account falls under, which is an asset purchase, fall under real account, while furniture repairs fall under expenses account, which is under the impersonal account. So in this case, we are now saying nominal account, we are now saying that in this case, furniture is an asset, while furniture repair is an expenses. So if furniture is purchased and being posted to expense account, it becomes an error. Then you need to correct it. In this case, how do you correct such an error? And mind you, correction of errors is a topic of its own, whereby we have many errors that are committed in accounting, and that will be treated as a topic of its own, where we have errors affecting the trial balance and error not affecting the trial balance. All that I will make justice by treating them one after another via my video. Let's see how we're going to correct this error. Here, we are going to debit furniture account 10,000 and credit furniture repair account 10,000. And you must narrate when you are posting in the Journal Proper. I will now say, being to correct error of principle. I told you why is error of principle. It is error of principle because a real account has been transferred into a nominal account. Therefore, it becomes error of principle. So how do you prove it out? Look at the proof here. You discover that you first expose the error. I'm coming to explain much. We'll go to correction of error. You first expose what happened. Look at this is furniture repairs account. Furniture repair account expenses was debited wrongly. This was an error, 10,000. But this supposed not be in this account. It's supposed to be found in furniture account. So if you discover that an error, it's not allowed for you to come and cancel or clean this. No, you have to make transactions that will correct the error. Not necessarily in the journal. I'm trying just to give the principle, how and for the picture of why the one account is debited, the other one is credited. So coming here, you're coming to remove by posting the opposite side of furniture repair account to make sure that you cancel this entry. Post in 10,000 in the opposite side of furniture repair account by way of balancing this account. So that 10,000 will minus 10,000 and this account will have 0. So as you are trying to prepare the new account, which is called the adjusted trial balance, furniture repair will not be found in the trial balance, and that error has been corrected. In this case, you take the 10,000 and record it in the correct side, which is where it's supposed to be, the furniture account, and furniture will be debited. And that is why from the journal it's called that furniture was debited with 10,000 based on the demonstration I've explained here, why furniture repair will be credited based on the removal that was in the account, and that's why furniture is credited, and furniture repair is credited, and furniture account, which is a real account, is being debited. Let's go to the second one now. Quickly, when I say the next transaction that are recorded in the Journal Proper is what is called transfer from one account to another. Transfer from one account to another account. Look at what happened here. A customer Godwin who owned the business to the 35,000 was declared bankrupt. Bankrupt means a situation whereby a person or an organization can no more pay its debts. By any way, he cannot pay his debt. So in that case, it means that the person have to settle the debt by any other person or any other means apart from his own resources. So we are now saying another customer in the business, which is Mr. James, who also was a debtor or a customer, decided to settle Godwin's debt. Either God was the friend or any other relation that was not our concern, but we know that James agreed to settle Godwin's debt. So in that case, it means the debt of Godwin will be transferred to Mr. James' account. How? Come here, let's look at the proof. All what I'm doing is a proof. Nobody is demanding that you should show all this. It's just explain the situation that happened, why an account is debited and credited just for clarity. Now we come here and say, look at what happened here. Mr. Godwin was a debtor with a business. Being a debtor, that's trade receivable. All balances in customer's account or debtor's account, trade receivable are debited. Look at the 35,000 that Godwin was owing the business and cannot pay again based on bankruptcy. So in this case, this 35,000, which was the balance that was standing into James' account, you post the opposite side. By posting the 35 in the opposite side, which is going to Mr. James' account, it means the debts have been cancelled. Because by way of balancing, 35,000 minus 35,000 will give you 0. That means there's no debt again or balance that is owing in James Godwin's account. Then this amount that is removed will be taken to Mr. James' account. Look at Mr. James is also a customer with a bill which is trade receivable, and all the balances should be debited. Look at the initial balance. I put S because we are not concerned, but we know that Mr. James also was owing the business. So the debt of Mr. Godwin, which was removed from Mr. Godwin's account, will now be transferred to Mr. James' account. As you can see, you now come and record it in Mr. James' account plus the other balance that Mr. James was paying. Then this becomes transferred from one account to another account. So in this case, this transaction, and that is why James was debited, because the amount was moved from Godwin's account to his account, while Godwin was credited because